All right. So, good evening. So today we are going to start our session on the business capstone. Uh, the first session or the support session that we are going to deliver under the new curriculum for the business level students. Uh, so I think I'm clearly audible and visible to you all.
Yes, Kalar. Yes.
Right. Okay. So under this guidance session, I think today we have all the business level students here with us. So under the guidance sessions, we are going to give you a clear understanding on how you can analyze your pre-seen case study, which we have published on our CA Sri Lanka website. So I think you all have a copy at the moment. The pre-seen actually it's an imaginary company based on Nisala Garments. So under our new curriculum structure, so I will give you a brief introduction. So before we start our session, so as you all know, under our new curriculum, so this is the curriculum structure. So I think now you all are very familiar with this. So at the very first level, business level, so we have 4 core modules plus the business capstone subject. So at the business capstone subject at the very first level, so we are going to develop, or rather we are going to create an entry-level accounting professional, so which has let's say who has the knowledge, or rather than let's say a hand-on experience on the real business environment. So on that perspective, so we are going to develop an entry-level accounting professional through this curriculum. So as I think we did a number of sessions on this uh, curriculum structure, and also a separate session on capstones. So there are a few steps that you need to complete in order to finish your capstone module under the business level. So as I mentioned before, so you have 4 core module subjects. So as the first step, you have to complete all those core modules under the business level uh, to get eligible for this capstone subject, capstone module under the business level. So I think now you all have completed the first step by completing all the core modules, and I think you all have got access for this power and integrity skill suit. So power and integrity. So we had number of sessions. So under that, we emphasized the importance of power and integrity skill suit. So how that those skills are interconnected with these assessments under the capstone module. So now I believe you all have completed this first step. So now you all are in the second step, which is now you all have this pre-seen case study with you all. So now at this stage, you all have to now let's say critically analyze the pre-seen those case study, and we have published the deadlines, so which you all have to submit the pre-seen the verbal pitch that you all have that you are going to record after analyzing this pre-seen case study. So that is the second step. So now we are in that step. So today we are going to critically analyze the pre-scene. So we have a very experienced resource person with us today. So so before moving to that stage, actually, I wanted to highlight this very important thing. We have published 3 study materials. So under business level, there is a separate study material for the business capstone subject. So you all have to purchase this material, because this is going to be really helpful when it comes to the final capstone assessment, as well as the verbal pitch uh, assessment. So under these what do you call business capstone assessments. So we have published 2 documents. The first one is the verbal pitch, that pre-seen case study, and there are a few guidelines. So you can go to the CS Sri Lanka website, and we have published those guidelines and instructions as well. So there you can see this verbal pitch rubric. So before you record your this verbal pitch assessment, that your session, so please go through this. Here we have mentioned how the marks will be allocated in we have mentioned four criteria here. So we are going to allocate marks based on these four criteria. So I'm kindly requesting from you all to go through these criteria, because these are very important. And the examiners, they are going to allocate marks based on these criteria. So under that we have analytical insight, communication clarity, persuasion and presence, and integration of external data. So please go through this. This is very important. So this is there in your verbal pitch instruction, that separate PDF. So please go through this. And I think today we have uploaded these two guidelines, submission guidelines, and step-by-step guide how you can submit your recorded verbal pitch that session to the LMS. So please go there and please refer those documents as well. And so those are the basic things that I need to highlight before the session. And without any delay, so we can start today's session. So before we get started, I would like to briefly introduce our resource person for today, Mr. Rohita Bandara. So Mr. Rohita Bandara is currently serving as an executive director on the board of Halis Fabric PLC. So, and he's also a fellow member of the Institute of Chartered Accountants of Sri Lanka, and he brings a lot of practical experience. I think he's having worked across the different industries in both Sri Lanka and Singapore, and also he has over 16 years of experience in the textile manufacturing sector, especially in finance leadership roles like sector head of finance and director finance. So I think with this expertise, this will be a very useful and insightful session for you all. So without taking much time, I would like to invite Mr. Rohita Bandara to continue with the session. Thank you.
Okay. Thank you, Kalhara, for introduction, and good evening to all. So I will let me switch off my video, then I will share the Kalhara. Can you give the sharing access?
Sure.
Yes. Right. Hope you all can see the capstone, no?
Yes, Mr. Rohita, we can share.
Okay. Right now, before we move into this capstone, now what I would like to highlight is now you are you have now completed the step one of the stages in the examination series. So this case analysis, you require the subject knowledge that you have already studied, right? So you want the management subject knowledge, accounting and finance knowledge, and a little bit of risk management, and also auditing knowledge, and corporate governance and risk, the ESG, that includes the ESG part. So all these subject knowledge, you want to blend it together, then only you can see what is the case study given. So based on that, your knowledge and the nature of the case study, you can answer to this question, this exercise, if very effectively, and you can score. You can go for high marks, right? So as you notice in the introductory session, So highest mark will be given for the analytical insight. That is 35 marks. Then the balance 25 is for communication. So altogether 60. So under analytical insight, what you want to do is you have to read the case very carefully, right? So each line by line you have to go through. Then you have to understand the nature of this case, whether it is a manufacturing company or the service oriented company, or what is the nature of this case. Then having understand that the nature, then you have to blend your subject knowledge together and keep that in your mind. So having keep that in your mind, so you can decide while you are reading this case, what are the issues included inside the each and every step of this case. So then with that issues, you can determine what is the best and simple solution and practical solution. So since you are in the first stage of the chartered stream, uh, basically the institute doesn't want to see the very impractical and the highly technical solution from you all, right? So your answers always remember simple suggestions, but and also the practical suggestions and relevant to the case, right? Then only you can go for a higher scores, higher marks, right? So with that, let's look at the now in the case study, and this case study I'm going to highlight to the issues that included in this case study, but I'm not going to tell you the solutions, right? But sometime there may be some solutions included in my explanation, but solution you have to think about based on your subject knowledge, right? Right. Now, if you go to the beginning, this is the Nisala Garment Private Limited, right? When you read the name, you should the immediately the what should come on into your mind is this is a private company, not the Colombo Stock Exchange listed company, right? And you are a finance executive, you are not the director or the managing director, right? So what they expect from you is the basically set of information for a final management decision, because you are not responsible for a final management decision, right? You have to analyze, identify the issues, and you can suggest, okay, what are the solution, right? So let's go to the company introduction, right? So here now there are 5 cases given, 5 scenarios. Out of that, one you have to select it, right? So before you go into that the scenarios, first look at the background information of the company. Now, this is as I told you, it's the garment industry, right? So where their raw material is the fabric, right? They take the fabric, they can take local or import, right? So we'll see how this company is going to procure the fabric. So that fabric, they can cut it and they can swing it and they can uh, uh, send it to the QC department, and they can do the packaging, and they can deliver to the customers. So customer in the sense there can be a two, right? B2B, business to business, right? So you are manufacturing company, you sell it to another retailer. So that's why we call B2B, right? Then sometimes B2C, business to customer directly. So we'll see what is the nature of this method of selling this company, B2B or B2C. And also you can sell this fabric or the rather garment either in local market or you can export it, right? So everything that you have to understand what is currently doing, what is possible, right? So this is the medium to small to medium scale garment manufacturing. So these are not the large scale, right? It's a private company, therefore it's not the quota public listed company, and also this is not the large scale company, right? SMD, small and medium scale company. So the founded by the Sandun Perera, who previously worked in apparel production and manufacturing within the Sri Lankan domestic market. So this is basically single owner running private limited company, right? So they do the batch production, right? Supplying casual garment to limited number of local retailer, right? So that indicates this garment are being sold to the local retailers. That's why we call it a B2B and also local selling company. So they don't export the fabric or garment. So over time, the retail chain expand and demand increase. The Nisala garment gradually increase the production capacity and workforce. So obviously they have, as doing with the other entities, so they have enough, the demand is increasing, so they have expand their production, right? And also they expand their workforce as well. So at the moment, now what we are considering the is as at 31st March, right? So as at 31st March, they had the total employees 320, and on which from which the production workers 250. So balance is an executives, right? And they don't have the factories scattered around throughout the island, so they have only one single manufacturing location, which is there in the Gampa district. So that also you want to take into the consideration, right? So company operates only in local Sri Lankan market and does not engage in export. So that clearly given export market, they don't cater to the export market, right? So remember, when you are giving some suggestions, uh, uh, if you give the suggestion that okay, do the export, so this is really not realistic at this moment, right? Because they have been doing the business and they have been catering to the local market. So going for export is a different scenario, different investment, right? It takes a little longer time. So that also you want to keep in mind. Otherwise, you can come into with the suggestion that go and do the export. So which is not practical right at the moment. Right. So their nature, they have a local fashion and retail chain. So ready-made garment, they sell it to the local fashion and retail chain and supermarket clothing brand and selector regional distributors. So all are B2B businesses. Right. The company operates a business B2B model and based on the confirm orders, purchase orders. Very important. So they don't bring the raw material and keep it for expecting some orders. They have a raw material only for the confirm orders, right? Therefore, there is no way of basically piling up the inventories unless orders are pushed back. Unless orders are pushed back, right? So they are catering, producing mainly three types of garments. So casual knitwear. Uh, so what is basically the t-shirt and jeans, everything. So basic fashion wear and also school garments. So these are the type of thing that we come across daily, right? Usual different type of garments. Then revenue has grown steadily. However, increasing order volume and larger batch sizes have created a new operational pressure. So that is true, right? So the management team details are given. You can see when you look at this management team, now you want to have your management knowledge, organization instruction knowledge, right? So here, position managing director, production manager, finance manager, planning and merchandising, HR and admin. So this is not the sole trader company or business. It's a private limited company, right? So based on your management knowledge, what should come into your mind is there is no board of director here. One thing, right? So board of director, we can't expect the level that the publicly listed company board of directors. So that is very complicated. Here is the simple private limited company, but since it is a private limited company, it's better to have a formal board. In a publicly listed company, there are different type of directors. There are executive directors, non-executive directors, independent directors, senior independent directors. That is basically based on the governance requirements. But for private company, you can have your own board, right? That freedom is there. right? Because you have not issued any shares to the general public, right? So here we have a production manager and the managing director, and all must have been reporting to the managing director. So that's what we can understand from this table. So production manager, basically the production planning, line efficiency, cutting and sewing coordination, right? So we have a finance manager, finance planning, cost control, margin monitoring, right? Then planning and merchandising manager. So what he is doing is order scheduling, retail and coordination, delivery timeline. HR and admin manager, usual labor management, attendance, right? Look at the managing director position. Still, we have not come to the cases, right? But I'm just explaining the what should come into your mind, right? While you are reading this case. Managing director is the final decision maker and overall strategic directions, which means all are reporting to the managing director. Now he is the one taking the final decision, right? So if he's going to take the final decision, right, he doesn't have enough time to go for a macro level decision, expansion decision, right? Strategic decision, acquisition. So he may not have enough time, right? Then if you take the production manager, now he's focusing on the production planning, line efficiency, cutting and sewing. But what I notice in this table is organization structure, there is no person called having overall responsibility, like a general, if I say general manager. Generally, for a factory, small, medium scale, or the large factory, there is a person who is responsible for the entire plant operation. So that is called general manager. So there is no general manager position here, right? So if that were there, these people would have been reported to general manager. Then finally, general manager communicates directly with the managing director or the board of directors, right? So it is very important to have the person who has the production knowledge to run this plant as a GM, right? So then finance manager, of course, you doing typical finance job, and planning and merchandising. This is another one. Planning is a production planning. Merchandising means finding the customers, buyers. If both tasks is going to be done by the one person, then there can be some inefficiencies, right? So for any manufacturing company, production planning and the marketing, there is a clear division of responsibility and there are two set of people. So planning has to plan and he has to coordinate internally. He or she has to make sure that the final product is coming out as per the scheduled date. But whereas the merchandising or the marketing division, they must bring the required orders into the company. Because this is they are producing for a confirm orders. Therefore, there has to be some way of getting confirm orders from the outside, right? So for that purpose, there must be a separate responsible person. Under him, there should be a team of marketing people. So that structure is not here. That position also not here, right? Then HR and admin manager, labor management, attendance, overtime, right? In addition to what he usually does as a HR manager. So these are simple flat layer structure, right? This is not a complicated, but there are some vacant positions in between, right? So those are some weaknesses that I noticed in this case, the organization structure, right? Then the company follows a functional management structure by function. It's clear, right? Merchandising, management, production, finance. So by function, they have set the structure with the monthly performance review meeting. So same information we can see in the latter part of the case study as well. So monthly performance review meeting for a manufacturing entity is not suitable at all. So you are manufacturing daily, right? So you must have to have the daily management the perform review meeting, production performance review meeting daily. This is another major weakness in this company, right? So if you are going to review the production, the performance at the end of the month, everything would have happened, right? So that is too late. So vision and mission is given. I know you are very familiar. Uh, and also, what I can tell you is nowadays, in addition to the vision and mission, we have a purpose, right? For a company, we have a purpose statement. So what is coming on the top is the purpose, not the vision and mission, right? So on the top of the vision, there must be a purpose, your purpose statement, and below that there is a vision, and under that there is a mission, and after that you have a core values. That's how the management basically teaches us, right? And in organization like a private company. So they have but they are, at the moment they don't have any the purpose, but they have a vision, they have a mission, and also they have their core values. Right? So you can notice down, student. Right. Then if you come to 2.5, growth and current position. Now they have a very steady growth, right? And however, growth has introduced the new challenges. As and when you are growing, obviously the subsequent the challenges are also coming, right? So they have increased production volume, right? On par with the increase of production volume, you have to consume high amount of the fabric, and also you need to have you want to strengthen the interdepartmental cross functions and proper coordinations, and also together with the increased volume, you need the more raw material, right? So as a result, you want the more working capital. So there is a increased working capital requirement. So those are interconnected. So then during 2024, rising fabric cost due to currency depreciation place pressure on gross margin. Right. That is because they are importing raw material fabric. Because in Sri Lanka, our functional currency is Sri Lanka rupee, whereas if you want to import it, you have to convert the rupee into dollars. Right? So let's assume if today $1 equals 300 rupee, you can import, if you pay 300 rupee, you can import $1 worth of raw material. But another 1 week later, if exchange rate becomes 350, you have to pay 350, not 300. It obviously increase your the import cost, right? So in Sri Lanka, generally we can see, because our rupee is basically weak compared to the dollar, so we can see every day is depreciating, right? So this is the main in the garment industry, main raw material is the fabric. So fabric they are importing, but remember still they have enough room to go for a local purchase as well, because in Sri Lanka there are many number of large scale fabric manufacturing company, right? If that is the case, they can avoid the currency depreciation risks, because if that is the case, they have to pay in rupees, right? So that also you have to keep in your mind, right? So maintaining margin stability while scaling operation remains a key concern. That's true, because every day when rupee is depreciating against the dollar, you have to pay more and more rupee to purchase the same quantity, right? When your expenses are more because of the currency depreciation, right? You can't pass that burden to the retailer, because the market price is more or less same, constant, right? Unless you are operating in the this we call the one single, if you are a single one single the manufacturer, or rather the company in Sri Lanka, right? We call it monopoly. You don't have monopoly, right? Okay. So then further growth will require the better alignment between production efficiency, cost visibility, labor productivity, working capital control. So if you want to have a growth, you need to have a better coordination with these factors, right? Now student, I think you have noted down the concern that we identify before we go to the particular each and every case, right? So the same thing are repeated in the latter part, right? The performance of the diesel garment is mainly influenced by fabric cost management. That is the, as I told you, is the largest cost component, right? And cutting and sewing efficiency, their internal efficiency, on-time delivery, right? So because you are doing based on the confirm orders, so they have a timeline. So you have to cater to their timeline. So that's we call on-time delivery, and also labor productivity. The garment manufacturing is basically labor incentive, right? You need the people to sew in the garment, right? So and also the labor productivity and gross margin stability. So now, what is there highlighted in the case is you target to have a GP margin of 20 to 30%, right? So that is basically a sustainable margin range. With the current transaction, operational discipline and timely cost information are becoming increasingly important. That is very true. Because when you are running a manufacturing company, always you want to take the decisions. That decision for you to take, you need the accurately, the precise information on time, right? If you don't have that decision, the information, you can't take effective decision, right? So we want to see whether they have a good information system inside. That's what this indicates, right? So my feeling is there is some sort of a weakness in the getting information, right? We'll go and see. So global market industry, these are now, then you are taking to the general market in the market overview, how the global and local market behave. So global apparel industry is one of the largest manufacturing sector worldwide, right? So I think you may have heard the apparel industry. There are more world renowned, the very famous renowned brand. They are Nike, right? This we call Intimissimi, Victoria's Secret, right? So uh, likewise, there are many famous brands. They are worldwide, right? And increasing preference for the ready-made clothing. Globally, garment manufacturers face rising raw material cost. So raw material cost means they are cotton, polyester, and also dyes and chemical, right? Energy and logistic cost increases. Shorter fashion cycle, pressure to reduce the lead time, and growing demand for sustainable production. So there are many challenges to the fabric manufacturer. Now you are a garment manufacturing, right? You take the raw material from the fabric manufacturer, right? So fabric manufacturers are above you. So we call upstream supply. Your upstream suppliers, they have a greater pressure, right? To remain competitive, many manufacturers focus on reducing fabric wastage. Now, when there is a cost escalation situation, when costs are increasing rapidly, drastically, right? You can't pass that. You obviously that will basically deplete your margin. That will reduce your margin. But to retain in the market and maintain the margin, right? What you want to do is you have two options. One is you can increase the selling price, or you can keep the selling price as it is, and you can reduce the cost, right? What is most appropriate is reduce the cost, because you can't increase the selling price because you are not the monopoly, not doing a monopoly business, right? You are not the single garment manufacturer in the country. Therefore, obviously, even the cost is increasing drastically, rapidly, you can't pass that burden to the customer. You can't increase the selling price. So what is more practical way is to reduce your internal cost, right? And maintain the desired margin. So improving labor productivity, investing in automation selectively, implementing real-time production monitoring, and strengthening the cost control system. Right, you have to you reduce your internal wastage, and also you have a labor incentive. You are running in a labor incentive industry, so you have to improve the labor productivity, and also better if you can if you can implement the automation system in your company, right? So that gives you the more beneficial, more effective solution for many matters, the issues, right? Right. So then if you look at the Sri Lankan local government market, say it gives some overview. In Sri Lanka, the domestic garment market has grown steadily with the expansion of fashion retail chain, supermarket clothing brand, and regional apparel outlets. Okay, there are many. You would have noticed in when you go to the city, there are many apparel shops are there, right? There are some famous shops, and also there are some even temporary shops also available, right? If you go to the Maharagama, there are many, right? Basically the unfamous. Those are not famous, but if you go to the main cities, there are famous retail outlets are there. The local market is highly price sensitive, particularly in the middle income segment, right? Because this target is the middle income, right? Customers expect affordable prices. That's true because you and I are basically always look at the what is the value for money, right? So customer expect affordable prices, acceptable quality, availability across retail outlet, and faster introduction of new style. Always we prefer to see the new style, no? So what we bought in 1 month ago, we never bought it again, right? Unless there is a new style. So many local manufacturers depend on imported fabric and trims, making them vulnerable to currency fluctuations, right? Currency fluctuations, right? Uh, when you read this Sri Lankan local government market, there is a special wording that should come into your mind: new styles. Who decide that in the government industry, there is a special, very key person and department is there. We call basically the designing section. They are the people only design the garment, right? Because they do lot of studies and surveys and see what are the passion currently going on, what type of styles there will be a demand in future, right? So you are a textile manufacturer, garment manufacturer. You can't produce the same pattern or same design for the number of months. Then you are failed. So you must have a proper, well qualified and practical design set, the team of designing who can foresee the future designing that will come into the market, right? So that designing department not there in the organization structure, right? That is one of the main key shortcoming that I can notice. There is no designing department, right? So okay, that also you can keep in your mind. So competition. So you would have learned in economics, there are many competitors, no? Monopoly, duopoly, perfect competition, right? Oligopoly, there are many markets. But what is there? What is this Nisala government operating in is they have four competitors, right? So they are not in the duopoly or monopoly government. So they are basically in the competitive market. Competitive market always, for you to retain in the market, your price must be very competitive, right? That's why I told you can't increase the selling price. So they don't give suggestions to increase the selling price. That is not the solution in the perfectly this kind of competitive market, right? You have to focus on reducing cost, right? These companies apply local retail chain and supermarket brand and compete mainly on unit pricing, production capacity, lead time, quality consistency, and fabric utilization efficiency. So competition in the domestic market is severe. Very true. You notice even practically there are many garment manufacturers, right? Particularly in casual wear and basic fashion garments. So that's true. So office wear, right? So we use the casual wear and also so when you are going for a party, you can even use the casual wear and also the fashion design, right? Key consumer and market trend. important trend in the Sri Lankan garment market include strong demand for affordable, because the target is to mid-level market, right? Increasing price comparison among the consumers. So before you go, after you go and select the particular the garment, always you compare, no? What is the price of the retailer A? What is the price of retailer B? Right? Among other things, and also you want to you want to see the good quality also. So retailer introducing small, more frequent collection, smaller, right? Higher expectation for consistent quality. You want to have a good quality garment and also at an affordable price. And growing awareness of ethical labor practices. Right. Now, these ethical labor practices mean now earlier, basically, you hire the labor and you paid the minimum amount, right? And you people they didn't give any basic. They give only the very basic facilities, right? But today's context that is not the case, right? So you have people expect, especially the consumers, they expect to wear the garment which came out from the ethical business practice, right? So ethical business practice includes the ethical labor practices as well. So you must pay them the reasonable the payment, salary, and all basic facilities, even more than the basic facility, right? So you want to, the customers, the final customers, consumer, they want to make sure that your labor is basically you have hired them within the legal framework, right? So in rising importance of inventory turnover and faster replenishment. So you should be able to replace it very fast, right? So if you keep the inventory more and more, there will be a obsolescence because the fashion industry is fastly changing, right? So very fast you have to do the replenishment. Otherwise, your product will be out of date, right? You can't sell it, right? Retailer increasingly expects supply to respond quickly to change in demand pattern. So that's why I told the company, they must have a very good, very talented designing team and design manager, right? So he should be able to understand what is the market trend another at least 6 months or 1 year ahead. Based on that, he can design with his team the appropriate garments. Then that garment, then they can manufacture and send it to the market while the demand is coming in. Then only you have a good market. Otherwise, you are always behind, right? So always remember the designing vacancy, yeah? So global brand and import. Imported garments and global brand influence the local market through imported ready-made garments sold in the major retail outlet, right? Because in Sri Lanka, we have a open economic policy. So internally you can produce as well as the finished garment you can import it, right? So then you have a competition. For example, if I tell you if you import the garment or the fabric from China, very cheap, right? So you have to compete with those garment and the fabric, right? And low price apparel imported in bulk and branded fashion product in urban shopping mall, right? Right. So even in urban shopping mall very far away, right? You can see the branded product, Nike, right? H&M, right? Many brand you can see. So import increase competition because some imported product benefit from the large scale production efficiencies and modern design that influence the consumer expectation, right? Their prices also fluctuate based on the exchange rate and import policies. Although imported garments do not dominate the entire market, they still create the additional pricing pressure for the local manufacturer. That's true, very true. Because when you import in from China or the Vietnam, right? Their prices are really cheap, right? So still there is a vacuum in the country for additional garment, but still you have a price pressure because their prices are Current styles are current styles, and also the prices are significantly low. So with all this background, what is the impact on Nisala government, right? So operating in this competitive and price-sensitive market means Nisala government must maintain a strict cost control. I told you, you can't increase the selling price, right? Only way of sustaining the business is to very strict cost control, improve the fabric utilization, right? Which means that you have to reduce your wastage. Improve fabric utilization means reduction of wastage. Enhance the productivity, deliver consistently to the retailer, and carefully monitor margin during the input cost increases. Remember, for you to do this, your MIS, management information system, must be very strong, right? If you don't have a very good management information system, so we call good ERP system, right, platform in your company, you won't be able to uh, do those things. So then we have to look at whether they have a ERP system, good, very strong ERP system. As demand grows, the management recognizes that the improving operational efficiency and strengthening cost visibility will be critical to sustaining profitability, right? So you must have a very clear cost visibility, right? Because before you make the product, you do the pre-costing, no? So you would have learned it. We call pre-costing. Based on the pre-costing, marketing department goes to the market and they take the orders. Then once you produce it, you have actual accounts. So then actual cost you can compare. So actual cost we call a post-costing, right? So you have a pre-costing and also you have actual costing. We call post-costing. So then you should be able to compare what is the difference between the pre-costing and post-costing also, right? To compare, to get that information, it is very vital, very important to have a good MIS system, right? Business model and product service portfolio. So Nisala government operate in a domestic government manufacturer supplying local retail chain, supermarket, clothing brand. The company follows the B2B model, so we discuss, right? So there is no B2C. And manufacturer government based on the confirmed purchase orders, right? So that we have already discussed, right? The company does not operate its own retail outlet and does not engage in export activities. But you can suggest like one thing. Locally, if they want, they can set up the retail outlet as a pilot project because they are producing garment. That garment they can put it into their own they can set up the couple of retail outlet in domestic market. They can put it and they can see what would be the outcome, right? But don't suggest export. It is not practical. Which is very little long term, right? Instead, its performance depends on the large on the ability to meet the delivery timeline, maintain the consistent quality of right? So everything we have discussed, I think this is a repetition of the what we have discussed, right? So revenue composition. If you go to revenue composition, now they are doing basically three types of garment. Casual knitwear, which is the highest category, 55%, 50% from the total revenue, and basic fashion wear 30%, and school garment 15%, right? So revenue has grown steadily over past 4 years, reflecting increased retailer orders and market expansion. However, production volume increase. As production volume increase, the company is required to handle larger order quantities per style, which has gradually shifted operation away from the small batch production towards the more structured line-based production. There is one weakness that you can identify here. Up to now, before the increase in production, right, what they have done is the small batches. But now they are shifting from smaller batches to the larger batches because of the increase in the volume. When you increase in the volume and when you are moving from small batches to the larger batches, remember you have to rearrange your flow space, your production flow, right? what you have earlier done is what you have earlier planned your production flow is to different production. You can basically it would be more enough for you to have a very small spaces because you have very little styles coming in, right? Say 100 meter, 50 meter product batch, 100-meter batch, right? But now you are getting 500 meter, 1000 meter, right? Large scale. Therefore, each and every production department, there must be enough spaces to keep that fabric before it taken into the next stage. And also, you must have enough machinery and also the people in each and every production department, right? Who to basically produce this uh, produce this uh, garment, right? Produce this garment because you are now moving from small to the large scale batches. So production flow rearrangement is very important. Otherwise, there can be a congestions, right, among the department. So these are basically practical cases, but you can basically uh, take into the consideration, right? This is how the manufacturing company, the inside of the manufacturing company looks like, right? Pricing and margin structure. Nisala government follows a cost plus pricing. Cost plus pricing means if they calculate the cost. What is the raw material cost? For example, 50. What is the labor cost? 20. What is the overhead cost? 30. Right? Altogether, total cost is 100. Then if they intended to keep, say, 25% margin on cost, they add 25. So your selling price would be 125, right? So that's we call cost plus margin pricing approach. You first calculate the cost, then on the top of that, you land your desired margin. Right? The company aims to maintain a gross profit margin between 28 to 30%, and fabric costs represent the largest component, right, of the total production cost, making material control critical for the margin stability. So always you want to make sure that you can increase the the there is a high sensitivity to the margin based on the fabric prices, right? So you can pay more focus on the fabric prices because if you reduce the certain percentage the fabric prices or the wastage, it has a direct large scale benefit to the margin, right? Because the fabric represent the major portion of your garment value. So during 2024, increases in the imported fabric prices due to currency depreciation, right? Uh, Place pressure on the company's cost structure, right? So you always examine is now talking about the currency depreciation, right? So the reason is they are fully depending on import, right? So that gives the indication that why can't you uh, because we always call not only the fabric prices of import exchange rate when you are importing, there are other cost element also, shipping cost, freight cost, insurance cost also part of the cost of the fabric, right? But those impact is not there if you purchase locally, right? So that gives the indication that not focus not only the imported fabric, look at the local fabric as well, local manufactured fabric, right? So we call and also when you are procuring the fabric, you can go for we call uh, nearshore procurement. Nearshore procurement mean very close countries, right? Try to see whether you can purchase from India, or try to see whether you can purchase from Bangladesh, right? Rather than go and get the fabric from China because China is little far away, right? Obviously, if you purchase from China, your import prices will go up because of the freight charges and the insurance, right? So you have to look at the internal local purchase and also the near shore purchases, very near country, the region purchase as well. right? Although so this is the point that you can keep in your mind, right? In this para. Although the improved fabric utilization help partially offset the impact, maintaining the margin stability while increasing the production volume remains the management concern. So still your margin maintain is the main concern, right? Now this is the business process. Right. Order confirmation from retailer. So we notice that there is no separate marketing team. So there must be a marketing team. And also uh, there is no designer, right? So design part not there. Then fabric procurement. Always you procure the fabric based on the fabric, the type of the garment, right? So you import the fabric. Then once you brought the fabric into the factory, there is a inspection going on before the fabrics are taken into the production. Once the inspection is done, it goes to the cutting and marker planning. You based on the design, you cut the fabric and you mark it. Then based on the marker, you sew in the fabric and you assemble it. You fix the button, shippers, everything, right? So after that, it goes to the final inspection and you have a quality inspection. But now when you look at this diagram, another thing that should come into your mind when you compare with the organization structure, there is no quality assurance department, no? There is no QA. We call QC or QA, quality control or quality assurance, right? So there is another important, this is another important vacancy, right? Like designer, right? There must be a quality assurance manager in charge of the quality. And also remember the line of reporting, right? Line of reporting has to be, quality assurance has to be independent. Therefore, when you have a GM, overall production GM in the factory, right, a quality assurance manager, it has to report to the little above level to carry out his function independently, right? But there is no quality assurance department mentioned in the organization diagram, right? Then after quality is okay, then they pack and dispatch. So that's how the operation is being conducted, right? So then operational characteristic. The business model require a timely procurement of imported fabric. Efficient cutting and sewing, coordination, minimal fabric wastage, control labor productivity, and on-time delivery. So these are the basic things. The management recognizes that the greater integration between the production data and costing information will be necessary to support sustainable growth when dealing with the current transition. So that's why I told you there must be a very strong MIS system in place. Value proposition. So Misala government position itself as reliable and cost-efficient local supplier. So that's how they have position in the market. So we call value proposition. How they have position in the market, right? If value proposition to retailers include the affordable pricing within the agreed margin structures, reliable delivery schedule, consistent stitching and finishing quality, responsiveness to repeat orders, and gradual improvement in fabric utilization and cost discipline. So these are the criteria based on which they have position in the market. As competition intensifies, maintaining operational efficiency while protecting margin is critical to sustaining the value proposition. Right. Now, these are the basic idea and information about the background, right? So then, but by now you would have identified what certain operational and certain weaknesses are. These are the mixed weaknesses, right? These are here and there. We identify while we were reading the case. Now you have to go to the particular one, each and every scenario cases. There you have to read it and see what you have already found out before, whether you can plug it into here, right? Which is the most suitable issue. In addition to that, there are some other issues also discussing under each and every section. Right. Now, these are the section now we want to focus and see the issues. What are the issues? So, organization structure, leadership, and governance. Right. Now you have already identified the weaknesses in the organization structure. No, it's a single owner, single person, managing director only. No, there is no formal board. Right. So Nisalagama is privately owned by the founder, Sandun Pereira, who serves as the managing director. Ownership and executive authority are closely aligned, meaning major operational and financial decisions require a direct approval from the managing director. If one person is trying to run business, it's a weakness, right? So the top person has no enough time to go and think macro level and expand the business. We always is basically busy with the daily routine activities, check signing, go to the production floor, checking the fabric, checking garment, right? And giving a various 100 approval per day. So he doesn't have time to go think beyond that. That is the weakness, right? And also there is no board of directors. In the board of director private company, you can appoint the suitable caliber, the person with the suitable caliber, right? So with a different field. So thereby you can enhance the value of your business, right? That has not been done here, right? So then, mm, and also we notice there is no GM position, and no, there is no designing major. It's an industry inherited the position, the designing division. There is no designing division, right? Who can forecast, and also there is no quality assurance division in the organization table, which we have already noticed, right? And also we notice the planning and marketing is running by the one person, which is not correct. So there has to be two different teams, right? Then company has a functional organization structure. Even though it's a functional, there are some very key important positions available, right? With clearly defined departmental responsibilities. While decision making is centralized at the top level, day-to-day operational matters are delegated to departmental managers, right? So current management structure is given. So you have already noticed and identified the weaknesses there. This structure allows direct communication between departments, though coordination challenges arising during the peak production period. Right. Then we'll go to 5.2 decision-making process. So monthly management meetings are conducted to review the revenue performance, gross margin trend, production efficiency, fabric utilization, labor productivity, and working capital indicators. Right. These monthly productions we can divide into two. Right. The operation related performances, finance related performances, right? So remember the production performance, you must review daily. So this is the major weakness we can identify in their decision making process. There is no daily production performance review meeting. So once you do the meeting at the end of the month, everything already happened. The post-mortem. You can't have a time to correct it, right? Rectify it. Okay? So there is no uh, daily production meeting. So it is compulsory, right? And finance related part, of course, you can have every 2 weeks time, or you can have a monthly meeting, right? Unless you have a major issue. Operation issues are typically discussed collectively before significant process changes and implemented. That is good, right? Capital investment decision, including potential automation or system improvement, require approval from the managing director based on the cost benefit evaluation and financial feasibility. So, okay, that of course correct, right? So even before you any capital investment, you do the cost benefit analysis, right? Then governance. As growing small and medium enterprise, Nisala government does not maintain a formal board structure. So that we identify, at the very beginning. So now this is a private company, small and medium scale enterprise. So better to have a formal board, right? Or independent committees. Now, if you go to the independent committee, if you take the listed company, large scale, the large scale private company or listed company, you can notice many independent committee. For example, audit committee, risk committee, nomination committee, and governance committee, right? Remuneration committee, right? Audit committee. So those committees you don't know to come and set up here because this is the small scale private company. But you must have to have a formal board, right? At least consisting of couple of capable people who have a different, rather the multiple skills, right? However, the management places an emphasis on clear responsibility, allocation, approval limit for purchase, segregation of duty within the finance function, and monthly variance discussion. This is another one. Variance mean, remember always the actual versus standard, right? Actual versus standard. For example, if you estimated the cost of material, cost of fabric is 100 rupee, and if you happen to purchase the material in the market practically for 120 rupee, then there is a variance of 20. Because you budgeted, you forecasted, you estimated cost is 100, but practically you paid 120, there is a 20 rupee. That 20 rupees we call a negative variance, adverse variance, because you have paid more. It would have been a favorable variance if you had paid less than 100 rupees. Right? So this variance is plays a very key role in your cost controlling. Right? Therefore, as we noticed in the above, the earlier, the production meeting, I suggested to have a daily. The monthly meeting is a weakness. Likewise, the variant discussion has to happen daily. Right? Various discussion has to happen daily. There we should be able to identify what is the standard, what is the actual. To get that information, you must have a good ERP system. So governance practices, right? So governance practices remain largely operational rather than strategic, right? The finance manager plays an important role in ensuring cost discipline, particularly during the period of rising fabric prices and margin pressure. Right? But remember now, even though it's a private company, right, you must have a good governance practices to maintain a sustainable business. Right? There must be a formal board and the delegation of duties, right? Proper reporting system, right? Proper the information system, right? So these are the key things for sustainability, which depend the sustainability of the business. Therefore, there must be a good governance practices also, right? So, but here is a operational governance practice, and also when it comes to the finance, there must be a good internal control system as well, into the finance department as well as the production department, right? Right. So, still we are in one section, section 5. So leadership focus on current challenges. With the current transition, leadership is increasingly focused on improving production planning discipline, enhancing the cost visibility, controlling overtime growth, reducing fabric waste, and managing working capital efficiently. The management recognizes that the future growth will require stronger coordination between the production, planning, and finance function. However, the current reliance on manual reporting and delayed cost variance analysis may limit the management ability to respond quickly to operational inefficiencies, right? That gives the clear indication that, or the signal that this company, they don't have the good ERP system in place, right? So this is the weakness, right? So that's why they can't respond quickly as and when they see the inefficiencies, right? So always there is a delay. Delay mean always there is a cost involvement, right? So 5.4. And also with the ERP, you must have a good planning system also, production planning system. Sometimes the existing ERP system, it has a planning tool, But some ERP system, it doesn't have a planning tool inbuilt. Sometimes the existing planning tool with inbuilt within the ERP system may not enough to cater to the particular industry, your operating system. If that is the case, you have to purchase the good planning system, good planning package, software from the outside. Then you have to link with the current ERP system, right? So then only you have a very good production visibility. You can plan it very well, right? Otherwise, what you are doing is uh, not worth, right? Now section 5 is completed. Now I think you would have already noticed number of weaknesses, no? Under the section number 5. There I think you have to identify only 3 weaknesses, right? So we discussed many number of weaknesses, right? So, but I don't want to tell you the certain cases. I told you the solution also, but most of the thing I don't want to tell you the solution. You have to think it, right? Here, what I'm trying to do is you basically motivate you to identify the weaknesses, right? Uh, right. Then go to number 6, operation, facility, technology, and real-time costing, right? Right. Okay. So this is another section. The company operates a single integrated manufacturing facility. So we notice, okay, they are operating in Gampao, located in Gampao district. The facility consists of the fabrics receiving and inspection area, cutting department, 6 sewing lines, finishing and quality control section, and the packing and dispatch unit. Okay. Uh, the facility was originally designed to support the batch production. If order volumes increase over time, larger production runs were introduced. This is what we had already discussed. Earlier, the production flow had been designed for the small batch production. Now, with the increase in volume, they they are now moving into the larger production runs, right? So, with the larger production runs, the existing flow arrangement would not be enough, right? So, you have to rearrange it. So, it's another weakness, right? So, placing pressure on coordination between the cutting and sewing sections. The physical layout supports sequential order flow. However, the material movement and style changeover occasionally disrupt the production balance. Right, material movement. So earlier you have planned the production flow for the smaller batches. Now you are getting a larger quantity of volume, right? So the movement is very difficult from one department to the another department, right? So that is the obstacle barrier. So unless you rearrange it, you can't run the production smoothly. And also the style changeover. Styles are because every now if you take the garment manufacturing company, they are manufacturing a different styles of garment, right? So that different style. So one particular batch, they do the one particular style. It's a basically continuous running. Once the particular style is over, then only they move to the another style, right? If I tell you the another practical aspect in our industry, right? So we always prefer, for example, dyeing in black color dye. So when you have a black color dye, we do as a one run. Once the black color dye is completed, then we wash the machine, then we go to the next color. If we can run it, it's very effective and very fast. So if you happen to change your style from frequently, right? From one style to another style, remember colors are different, right? So sometimes you may have to stop the machine and change the needle. And also you have to change the thread, colors of the thread, right? So if every time when you are going to stop the machine, always it counts the inefficiency. right? Therefore, it is very important to run the selected style as much as possible. So that can be done with the support of proper planning software. Right? If you don't have a proper planning software, you can't basically plan the production. Otherwise, the different styles are coming here and there, and you put the style A now, style B another 1 hour later. So then the entire thing will be messed up, right? So therefore, to keep the undisrupted production flow, you always try to minimize this changeover, right? Changeover. This is another weakness, right? Then capacity utilization. The installed production capacity of the factory is approximately 4,800 garment, right? Per day. Under the normal operating conditions, current performance indicators are given below. So always remember to take the calculators, right? I think calculators are allowed, right? At the exam. Okay. Then you have to see this information and you can do some rough calculation if you want it, right? Now labor hours, now they have given normal period and peak period. So labor hours per day 2000, but when it comes to the peak period 2300. But garment produced 2100, 2000, 4100, 4439, right? So output per labor hour 2.05, 1.93. Yeah, when you, even though you have a during peak period, even though the labor hours you can see increase, your output per hour has reduced. That counts the inefficiency, right? And at the same time, you have consumed the capacity at 92 level percent. You have utilized the capacity 92%. Having utilized the capacity 92%, still your output ratio is less, which means that is you have not utilized your labor efficiently and effectively. That's what the meaning is, right? So if you divide the output by number of hours, you can see and compare with the peak and normal period, you can notice the output per hour has decreased by 6%. Per hour output, there is a 6% decrease. And also the labor hours, 4,100 to 4,439, your labor hours, 2,000 to 2,300, it has gone up by 15%. One side on the output per hour decreased by 56%, and hours increased by 15%. So it clearly inefficiency, right? That is another weakness. Although the number of labor hours increased during the peak demand period, output per labor hour declined slightly, right? The management has observed that overtime does not proportionately increase in the final output. So when you have a peak period, you have to pay overtime. But when you compare the overtime and the overtime that you are paying, company is proportionate. So expected outcome during the peak period has not come, even though you pay the overtime, which means the overtime is basically not the effective mechanism, right? That is another one. That is not the real encouragement, right? So for your purpose, I can suggest uh, if company can propose per unit base, piece-based incentive scheme. Additionally, if they produce during the peak period, additionally, if they produce one garment, they can pay one particular amount. So this indicates what? There is no production related KPIs. KPI mean key production indicators or key performance indicators, right? In this company, we have never come across the KPIs, no? So you have to decide normal period, what is your normal daily production? Peak period, what should be the minimum daily production, right? So that's called KPI. That KPI has to be pre-decided. and has to be followed by the basically the GM level person. Right? He is responsible for each and every production. There must be a different production related KPIs have to be set, and each and every KPI must be followed daily basis. Sometimes in the garment manufacturing, they follow hourly basis, right? So hourly basis KPIs are being followed. So in this case, there are no such KPI setup, and also there is no follow-up process, right? Okay. Then and also overtime is not effective mechanism, right? Then 6.3 swing line performance and downtime. The factory operates 6 swing lines, the machine line, right? To stitch the garment. Current performance indicators include the following: average line efficiency 78%, so which is a very, very poor. So what is the machine capacity? As per the standard output, and in the line, what is the actual coming out? So 78 mean basically you have inefficiency of 22%, which is not acceptable. And also target line efficiency 85, 15% inefficient, right? Average rework rate. Some style can go wrong and they have to rework it, right? So average rework 4.5%, but if you can't remember what is the best rate, you have to say compare with the industry. What is the rework? If you can reduce this rework, it will reduce your cost, right? Then sewing machine downtime. See, machine downtime 6 to 8%. So this also indicates that you don't have a proper preventive maintenance mechanism in place, right? Company doesn't have the proper preventive maintenance mechanism, right? These things would not happen if you had that preventive maintenance. Before something happen, you have your engine. There must be a good maintenance team in place within the company, and that maintenance team they have to decide what are the basically machine that they are going to maintain, repair, right, periodically. So that periodic maintenance has to happen as planned. Then you can reduce this machine downtime, right? So when you have a machine downtime, your output definitely will come down. So as a result, still you have to pay for labors and overhead. So your cost is increasing, right? So cutting machine downtime also 5%. So if when there is a 5% downtime in the cutting machine, you can't cut the fabric. There is a delay at the inception. So that will have a negative impact to your output, right? Even it will impact your uh, on-time delivery also. And also style changeover 3 to 4 hours. This is also very high. Always you must uh, try to have a consistent style running in the plant, right? So these are the couple of weaknesses. Rework rate is mainly attributable to stitching inconsistencies and minor quality defect identified during the finishing inspections. Rework increases labor time and may result in additional material consumption. That's true. Downtime is mainly attributable to style changes. So remember I told you, when there is a style changes more frequently happening, you have to change the needles, you have to change the thread, right? You have to stock the machine. So that basically counts the cost, right? So it mainly attributed to style changes and minor machine adjustment. And delay in material transfer from cutting to sewing preventive maintenance is carried out periodically. But there is no real-time downtime monitoring system in place, right? In garment or any manufacturing company, right? Manufacturing company, there must be a downtime monitoring system, right? So there are some, we call technically digitalization. right? So there are some equipment that can fix into a machine. So machine counts when you start the machine. What is the output came out? At what time you stop the machine? What is the time after how many minutes or how many hours time you restarted the machine, right? So likewise, those kind of the equipments are available, right? If you fix those equipment, or if you digitalize your machine in the production flow at any time on a daily basis, you should be able to know uh, what are the downtime, whether it is a real downtime, genuine downtime, or whether due to inefficiencies or because of the real reason, genuine reason, right? How to minimize those downtime. Likewise, you can take many effective decisions. But here there is no online downtime monitoring system in place, right? This is another weaknesses, right? Then uh, costing and production data integration, right? So company currently applies a standard costing system to determine the product cost. Standard costing, right? Standard costing means you predetermine the cost, then you compare with the actual costing, right? So then only you can see the variance. Standard material and labor cost are set at the beginning of each period. You decide, okay, what will be the material cost and labor cost. And the variance analysis is performed at the month end. I told you, this is another weakness. Month end you can't have a variance analysis. You must analyze the variance on a daily basis. Cost variance are resulting in the fabric usage. Labor efficiency and overhead absorption are reviewed only after production budgets are completed. So if you are doing this on a daily basis, right, the following day inefficiency can be avoided. You can avoid it. But if you are doing it on a monthly basis, entire 30 days already you have wasted the budgets. Your loss is already absorbed. Can't do anything, right? As a result, deviation from expected level of performance may not be identified during the production cycle, right? So you can't identify then and there. So that is another weakness because you don't have a adequate, proper, sophisticated system, good ERP system, right? The production data and cost report are not fully integrated, and operational managers do not have a real-time visibility of per style cost performance. You don't have a good ERP platform, and also you don't have a good planning module. As a result, managers, each and every line manager, operation managers, they are uh, not in a position to see the real-time data, right? This limits our ability. This limits the ability to take immediate corrective action when efficiencies arise. So then and there you can't take the decision, right? So I will tell another one. Basically the solution. You can basically decide some uh, BI, business intelligence based dashboard, production dashboard. There you can set the all these performance parameters there, and that can be linked to the smartphone, right? Each and every manager. So then manager while he's working or he's at home, he can see all the real time data coming into his mobile phone, right? Whenever he's there, wherever, right? So he can immediately look into and he can immediately attend to the work if he notice that something is going wrong, incorrect. Well, that facility is not in the company. So that is section number 6, right? So then if you go to section number 7, this is another section, right? Risk management, compliance and internal controls, right? Company does not maintain a formal enterprise risk management department, right? That also we notice. There is no risk committee. We don't have a risk committee. At least you should be able to identify what are the risks pertaining to the business, So there is no formal risk management framework in practice, right? That's the weakness, right? So there in the formal risk management framework, what you're supposed to do is you should be able to identify your industry related, your plant related risks, and you should be able to measure what is the magnitude of impact, right? And what are the mitigation actions, and you have to follow it up, right? So these things are not taking place in this company, right? And also there is no information that at least the risk register is maintained. At least there must be a risk register, right? Either in the software form or the at least manually, right? However, the management regularly discuss operational and financial risk during the monthly performance review meeting. So uh, you can follow it up at the monthly performance review meeting, but before that, you must have a proper risk management system. You should be able to identify the type of the risks and appropriate actions to be taken in case of an emergency, right? So without that, the monthly operational discussions at the monthly operating meetings are basically not worth. And risk monitoring is primarily integrated into operational and financial discussion rather than managed through the formal risk register framework. So there is no risk register. So they are formally having a discussion. That's all. So it's the significant weakness, because risks you have to categorize, no, controllable risks, uncontrollable risks. Controllable risks, right? You can eliminate. Uncontrollable risks you can minimize, right? For example, exchange rate fluctuation, right? When rupee is depreciating, is a risk, but you can't control it. But you can minimize. How? You can, if you purchase locally, you can minimize. Or right? So likewise, you can take some actions. Then operational, key operational and financial risks, right? So here they have categorized all the risks, operational and financial and compliance. And they risk level they have categorized medium, high, and low, right? But there is no risk matrix. In the risk matrix, right, you have to identify operational risks. What are the risks, right? What is the impact, right? What action you have taken to mitigate that? What is the future outlook, right? Financial also same, compliance also same, right? So, and also you have not, they have not focused on the business risks, which is very important, right? They have categorized all the risks into only three: operational, financial, and compliance. What is the market risks? Business. Market risks has not been addressed here, which is completely wrong, incorrect, right? That is one of the main key risks that you have to focus on, right? And also after you categorize the market risks, operational, financial, compliance, all these risks, and you have to put some the marks. You have to put some marks, scoring system. Based on that, you should be able to identify what are the top priority. How to identify top priority? You can have a you can decide based on the likelihood of occurrence and the level the basically the magnitude of the damage, right? Level of occurrence, magnitude of the damage, right? Then if level of occurrence is high and also the magnitude of the damage is very high, so those are in red colors. You can categorize as red, top attention, right? And also magnitude, the level of occurrence is medium, and the magnitude also medium, you can put it as medium. If both axes are low, you can categorize as low. For these things, you don't want to spend the millions of rupees, right? These things internally you can do that, right? Even a small company, you can do that, right? Then what you have to focus is the red color ones. Likelihood of occurrence is also very high. The damage also very high, right? For those things, those squadron, you can you can decide what action you want to take it to prevent these or minimize. That kind of formal risk matrix is not available in the company, right? So then fabric cost volatility remain the most significant financial risks because the fabric represent a larger proportion of production cost. So you have to now fabric cost is the main raw material cost, right? It fluctuates drastically because one thing you import it, when you import it, I told you there are the other cost element as well, freight cost, insurance cost, shipping cost, right? So these are uh, even nowadays very high. So and also it has a direct impact on currency depreciation, right? So you have to look into the alternative option, locally purchase, or sometimes if your destination is remote, you can see what are the nearest location that you can buy. And also, you have to basically bargain the prices with the suppliers, right? That bargaining uh, uh, mechanism is not visible in this case, right? And also, what I would suggest is okay, you can arrange you can make the agreement with the supplier on future, so kind of a forward pricing arrangement. For example, say there is a supplier called A, you constantly buy large volume from him, right? So you can agree today, okay, I will buy another 3 months' time, 100,000 meters, and fix the price as $1. You are going to fix the price for 3 months. So whatever said and done in the market, you are sure that over the next 3 months, your import price is $1. Right? Your import price is $1. At the same time, in local market, now, okay, $1 is remain same. But what happened to the local market? Your rupee depreciation. Today price is $1 300, another 1 week later it will be to 330. There you can have another set of formal agreement with the bank to fix the currency exchange rate over another 1 month's time or 2 months' time. Then you are doing two things. One is locally you are fixing the LKR value per dollar, and also you are fixing the dollar value per meter or per kg with the overseas buyer or the supplier. By doing both cases simultaneously, you are mitigating your risk. One is the price increase risk, the other one is the rupee depreciating risk. Right? Those kind of mechanisms is not here in the case. Right? So 7.3 internal control practices. Right? Now this is manufacturing company. Right? So the company has implemented a basic internal control procedure appropriate for SME environment. Key control include approved supply list for fabric procurement, purchase approval limit, monthly physical inventory count, overtime approval, segregation of duty, monthly reconciliation of AR and AP, receivable and payable. Production control rely largely on the supervisory oversight and manual documentation. Again, that indicates no proper system. Material usage variants are reviewed monthly. However, there is no real-time monitoring of material consumption. That is because of the lack of a proper system, ERP. As a result, corrective action in response to material or labor variances may not be taken immediately, potentially affecting the cost control during the production cycle. So, internal control. When you see the internal control, what should come into mind is the internal audit. There is no internal audit carrying out in this company. So you don't want to have set up the large internal audit department. At least one or two people must be there to check every day, each and every section, including the finance. There is no properly designed internal audit function taking place in this company, right? So a small team is more than enough, right? Even 2 people who are reporting directly to the managing director or the board chairman, right? And the other one is a uh, uh, approved supply list for fabric procurement. Now, this approved supply list you have to review at the frequent interval, frequently at the certain interval, every 6 month time, every 3 months time, right? Because the prices are fixed, suppliers are also fixed, right? But practically you have to explore more suppliers, and also you have to find the cheap prices, the low prices. Therefore, once the supply list is confirmed, same supply list you have to review at the frequently. In addition to the reviewing the existing supply list, you have to explore the new suppliers as well. You have to onboard. Not too much suppliers, at least the reasonable number of suppliers. Right? And also the monthly physical count wouldn't work. No work, no, it doesn't work. For a manufacturing company, you must implement daily cycle count. There is no daily cycle count here. Cycle count means not the full count, sample. You go to the warehouse, you pick the sample and you count it and make sure that those are matching with the system numbers. You go to the cutting department, you take the sample, count it and match with the system. Go to the QC department, take the sample, match with the system. Right? So only sample. But every month you can do, if you want, 100% physical count. And also at interim, that is called interim count. At the month end, you can do the final count. But what I want to highlight here is there are no cycle count daily taking place. Right? And overtime approval. There is no information given in the case. They have a uh, attendance system proper, right? Computerized attendance system. So when you have a good attendance, automated attendance system, only you can calculate the overtime, right? Then only you can pay the overtime only for the relevant people. But here that information is missing. And segregation of duty within the finance department, of course, is okay. And monthly reconciliation of receivable and payable, it can be accepted. Production control rely largely on the supervisory uh, oversight and manual documentation, which is not acceptable. There must be automated system, right? No ERP system, right? So then material usage, everything, you have to monitor daily basis with the variances. So then compliance environment. The company complies with the Sri Lanka Labour Regulation Employee EPF and ETF statutory requirement, right? Inland Revenue Tax Regulation and basic environmental and waste disposal requirement. So those are the normal regulations. No major regulatory penalty has been reported to date. However, increasing retailer expectation regarding the ethical sourcing and labor practice may require a stronger documentation and monitoring procedure for in the future. What is this? Now, ethical sourcing means, remember now, you are importing fabric, right? So when you are importing, you must ensure that the fabric manufacturing company, they produce the fabric using some ethical standard. For example, they have not employed any child. So we call no child labor. And also they have not employed the people forcibly. No forced labor. Right? So no child labor, no forced labor. Right? And also they are basically paying reasonable payout to the people. And overtime also they pay. Right? All those, the parameters, you have to check it. How you are going to check it? You can't go to their plant and check it, no? Right? what you can do is you can get the declaration, certificate from them, declaration from them, signed by the managing director of the company or the highest level, right? So, but if you are working in Sri Lanka, anyway, you have a greater extent of basically verifying those. But when you are importing from a different country, remote countries, you can't physically go there and inspect, right? Therefore, that is another limitation, right? So we don't know whether this ethical sourcing is actually in practice, right? And also you have to have a proper monitoring system. So regularly you have to get their declaration, right? They are basically complying with their country labor law. They are not basically doing a child labor, not practicing child labor, and there is no forced labor, and the overtimes are within the approved limit, right? Likewise, you have to get their declaration. And also now they are talking about the wastage disposal, right? Still, there is no information given whether now when you dispose of this wastage, you can't sell it to the, for example, in a textile factory, garment factory, there are some off-cut wastages are there that you can't sell it to the person that you want it, right? So the person who is coming and buying this wastage, there should be a license. He must take it from the Central Environmental Authority. We call scheduled waste license, right? The scheduled waste license must be taken before you offer the wastage disposal proposal to the people who are eligible, right? And also that license is issued only for the particular period, say for example 1 year. So you want to make sure that before it lapses, it gets renewed, right? So there is no information given in the scenario or the case that they are taking that scheduled as license or the proper licensing license verification, right? And control and uh, right, okay. Then control and monitoring limitations. Although internal controls are in place, certain limitation exists in the company, like a heavy reliance on the manual reporting. So that we discussed a couple of times. Limited real-time production data, delayed identification of material inefficiencies, absence of a formal risk scoring framework. So just now I told you, and limited preventive maintenance documentation. Those we have identified in the earlier scenarios, right? As operation grow, strengthening the data integration and monitoring mechanism may become increasingly important for sustaining performances. Okay. That's all about the section 7, scenario 7. So there I think you have identified the enough weaknesses, no? Business cases, which you can address and give the solution. Right. Then we'll come to the section 8, the financial part. Most people, students very much prefer financial statement and performance review, right? The P&Ls given for 5 years, 4 years. So there you see we have revenue and cost of goods sold. Then you have GP. So GP percentage 29 to 30%. It fluctuates, no, 27 and 29, right? Operating expenses 310, 340, 375, 390, and now we have operating profit. So better you calculate what is the GP percentage margin given. So better you calculate and see what is the operating profit margin also, right? So how to calculate operating profit margin? Your operating profit 169 divided by 1650 multiplied by 100, right? So when you calculate the operating profit margins, so you can see margin basically starting from 10, then 11, 8, and 11. So there are no significant fluctuation other than in 2024. Their GP margin also 27%, operating margin 8%, right? That is because their cost is little high compared to the rest of the 3 years, right? So what is the performance of observation, right? Revenue has grown steadily over 4 years period, reflecting increased retailer order and expansion of production volume. Gross margin remained within the 28 to 30% target range during the 22-25, except 24. But remember, you, here there are no budgeted numbers, right? Every company, every business, they prepare a budget, annual budget. That annual budget they segregate into every month. So at the end of every month, the actual financial results they compare with the budgeted numbers. But here, what you have been given is the only annual actual numbers. No budget numbers are given. So that gives the indication of another weakness of no proper budgeting mechanism is in place, right? They have not done the yearly budget, which is very wrong. Then you can't compare. You have no target then. When you have a budget only, you know exactly, okay, at the end of the 12 months later, what should be the target that you have to reach in terms of profit before tax and profit before tax? What should be the revenue target, right? Then only you can drive your team. When you don't have a budget targets, right? Basically, you are clueless, right? You don't know where to go, right? Whatever the actual number you believe is a target, which is wrong, right? So there is no budget, right? So there is another one, right? And preliminary due to an increased imported fabric cost following a currency depreciation. So we have identified the solution earlier, issue earlier also, and we know the solution also. Although improvement in the fabric utilization partially offset the cost pressure, overall material cost increases affected profitability during the year, right? In 2025, gross margin covered 29%, supported by the tighter material control and improved the production coordination, right? Operating expenses increased gradually over the period due to higher labor cost. Administrative expansion and increased overhead associated with the higher production volume. So operating expenses has gone up yearly, right? That includes the administrative expenses. Remember, always you must have that's why I told you, you must have a budget. And also in the budget, you should have a certain KPI. For example, administrative expenses, you can set, okay, year on year, you can increase maximum 10%. That is your target, irrespective of whatever thing happen, right? So then you can have a greater level of control, right? And also the higher labor cost. So you must have your HR budget, your labor budget. And based on the labor budget, you can quantify what is the budgeted salary figure. If you don't, then you have a target of salary and overtime, right? So none of these are available in this company, right? So as a result, you can see the fluctuations are there, right? So you want to make sure that you control all these wastage, labor cost, administration overhead, and there must be a financial related KPIs. Earlier we discussed the operational level KPIs, production KPIs. Now when it comes to finance section, you must have to have a finance related KPIs, right? What is your GP percentage? What should be your PBT, profit before tax? Profit after tax, of course, don't write it because profit after tax depends on the taxation, right? Which is out of your control, right? So always focus on the profit before tax, right? So cost structure, fabric 58%, direct labor 22, factory overhead. So always focus on fabric and direct labor. So that counts already 80%, right? So given the high proportion of the fabric cost, small changes in material consumption significantly affect the gross margin, because that is true, because these two elements represent, even the fabric cost represent more than 50%, right? Right. Then balance sheet, right? Okay. When you go to the balance sheet, you have working capital indicators, right? So even balance sheet, of course, you can calculate and see whether the ratios are favorable or unfavorable. But I am focusing on this now working capital indicators. You can see now it says net working capital days. How they have calculated net working capital? Inventory 96 days, receivable 60, altogether 156 days, right? But you have to pay to the payable supplier within 73 days. First, you bring the inventory. That inventory they are in your warehouse for 90 days, 96 days, right? Then once you make the sale to the customer, right, it takes 60 days. Altogether, you have to wait 156 days to get the cash. But before that, you have to pay for the suppliers. Then only that's why you have a working capital difficulties coming in, right? So how to minimize this? If you can delay, if you can reduce the inventory days, right? Write down say 90 instead of 96 days. If you can bring down this to 60 days, ideal, right? Because you are making to the orders. Why you have a higher number of inventory days? Because you are importing, right? For import, there is a sailing time also, right? From the China to Sri Lanka, at least one week or 2 weeks sailing time. And also you must basically from the continuous frequent style of garment, you want to keep some buffer stock also, at least certain small portion. Because when there is a ship delay, you can't produce the garment and give it on time, right? If you from 96 days, if you can reduce to 60 days, ideal, right? Then receivable, you have a 60 days. Customer takes 60 days to pay. If you can bring down to say 30 days or say, then altogether 120 days, right? Then payable 73. If that is the case, your net working capital would have been 47 days. At least good, no? Comparing to what is currently available, right? So therefore, you can focus the inventory minimization of inventory days. That's why I told you can look into the local purchases of fabric. There you don't know to keep this level of inventory because immediately you can buy, right? And also if you you can focus on very very close destinations like India, right? Then you don't know to keep this much of inventories in your warehouse, right? And also receivable days, you can discuss with the customers and you can give some percentage of discount. But there are some other the very complicated ways of managing receivable, but like discounting, factoring, right? I'm not going to tell you that because you are still stage one. You should be able to manage it. And at the same time, the other option available is because you have a regular set of suppliers, you can discuss with them and you can get the extended credit period from the supplier. Then your payable days, instead of 73, if you can get 120 days, you are better off, no? Right? You can get some more credit period by discussing with the suppliers. Right? So these things are not taking place in the company. This is a weakness, right? It's a weakness we can notice. Right. Then 8.6, if you go, financial performance summary, the overall company has demonstrated steady revenue growth and margin recovery in 24-25. However, financial performance indicates sensitivity to the fabric cost fluctuation because that is the 58% representation. Production efficiency and working capital management. Because working capital management, you have not dealing with any supplier to get the extended credit period. And also they have not focused on the local purchases, right? Locally fabric purchase, right? Sustaining profitability while expanding operation will depend on improved operational control and timely cost monitoring. So that is not there. Right. That's on financial part. Right. Then those who wished, you can go for the sustainability and ESG part section. Right. So environmental consideration. The company recognizes the government manufacturing as environmental implication, particularly in relation to fabric wastage, energy consumption, water usage, and packing material. Right. Fabric waste is monitored in batch completion, and management has introduced improved marker planning and closer supervision at the cutting stage and reduce off cut. Reusable fabric remains are separated for smaller product line. Okay. So they have implemented the waste management, right? But each and every stage, not only the cutting, even the other production level also, there must be a wastage monitoring mechanism that is not there, right? So only at the point of beginning and at the point of end, waste management is not effective. In between, when you have a more production department, in between each and every department, you have to monitor it on a daily basis, right? Wastage. And also there must be a production KPIs that is not there. Then electricity consumption is tracked monthly through utility bill. That also another weakness. Monthly you can't monitor the electricity consumption. You have to monitor it daily because daily you have a consumption. You must have a daily KPI. And also there is no solar system, right? Energy. If you read this para, so they have not taken any alternative step to minimize the electricity consumption. So what you are taking from the national grid, right? So rooftop solar. So basic energy saving measure include the use of LED lighting and switching off idle machine during a non-production period. Right? However, energy usage per unit output is not formally measured. So daily you should be able to measure what is your unit of electricity consumption and what is the output, what is the per unit consumption. That mechanism not available. And water is mainly used for finishing processes. The water consumption is monitored through the monthly bill. That also not ideal, no? You must have your sustainability related KPIs. Now third KPIs, no? Earlier we discussed production related KPI. Then when it comes to the finance section, we discussed the finance related KPI. Now when it comes to the sustainability, you must have to have a sustainability related KPIs. How to reduce the electricity, how to reduce the water, right? All those, how to reduce some other oil or energy type, right? So all those KPIs must be set and must be monitored on a daily basis, right? The basic leak inspection and control usage practices are in place. Packaging material are standardized to reduce the excess carton usage, right? And also, if you can use some this packing material, if you can reuse it, right, is kind of a saving. While these practices provide the basic environmental control monitoring largely periodic rather than real time. So all the control what we have noticed here is a periodic control, not the real time control, because they don't have enough uh, IT related platform available. Right? So this has to be real time monitoring system. Then social responsibility and labor practices. Right? So with approximately 320 employees, the company plays an important role in providing employment opportunity within the Gampar district. The company applies with the labor regulation, EPF, ETF requirement, and overtime regulation. But remember, there are some HR policies has to be in place, right? For example, remuneration policy, recruitment policy, ESG policy, anti-bribery and corruption policy. Those policies are not there in the company. HR-related policies have not been drafted and approved. Approved HR policies are not there, right? But just paying a EPF and ETF and the job opportunity is not the formal function of the HR department, right? So that is another weakness. During peak production period, overtime hours increase. Although overtime is approved through a proper document procedures, the management has observed that the productivity per hour labor declined during the those period. So we noticed earlier, because there is no effective overtime. Then you have to, this is another weakness. Overtime is not effective. So you have to introduce another formal mechanism, piece-based, unit-based incentive. Maintaining employee morale and avoiding fatigue is considered important for sustaining long-term productivity. That's true. There must be a continuous workshop. There are no workshop. So motivational program, right? And also you can implement some. There is no rewarding scheme, best employee, best shift, right? Uh, and best department, right? Likewise, always the motivational program has to happen. That is not there in the company. That is the weakness. The company has introduced the basic upskilling programs for swing operators that comprise the safety briefings and training on machine handling, supervisory monitoring, and workplace safety. So those are the health and safety training and the machine-related training. Those basically not help to improve the morale of the people. Motivation. These are not the motivation factors, right? So that kind of the motivational program must be implemented, right? Then governance and ethical business practice. So this I think we have already discussed. The company maintain the basic ethical business practice, approved supplier list. So you have to screen the supplier, whether they are doing ethical business, whether they have a child labor, whether they have a forced labor. Those declaration they must take it, right? So regularly you have to review it. And also remember suppliers, even before you onboard them, there are some the practical certification, right? Related, because you purchase the fabric from the suppliers. So, suppliers, there are some lot of certification has to be taken, right? For example, if I tell you Ocotex ZDSC means zero discharge of hazardous chemical. They have not used the hazardous chemical in their manufacturing process, right? And also blue sign, that's also chemical related certificate, right? Those kind of certification, they have to take it before they onboard the suppliers. So that kind of certification taking process not there in the case, right? Therefore, so valid certificates are not taken. So that is the another weakness, right? And transparent payment process, monthly financial reporting, compliance with the tax regulation. So those are okay. Retail customers are increasingly concerned about the ethical sourcing and labor standard, although the company currently meets the local regulatory requirement, right? So you have to make sure that the earlier what we have discussed, child labor, forced labor, relevant standards, certificates are taken, right? Strengthening documentation and reporting practices may become important in the future. Okay, those are not there, but you can identify as weakness. Then sustainability challenges linked to the growth. As production volume increase, the company faces the severe sustainability related challenges. Managing higher material consumption, controlling fabric waste, avoiding excessive overtime, ensuring safe and stable working conditions. So there must be a proper policies and system has to be in place before they address to this issue, right? So those are what I notice is sustainability related challenges, right? Weaknesses. So finally, the last case, the community involvement and CSR, right? So in the CSR, because you have given the employment for 300 employees, right? And you have a surrounding local communities, right? So you want to make sure that not only the employees are benefited, even the surrounding communities are also benefited, right? With your profit. So certain part of the profit you have to allocate for them, their well-being as well also, right? For that I told you there is no budgetary allocation, right? So you at the every budget there must be a certain amount you have to allocate on a monthly basis for a CSR activity, right? So that is not there. And also, there is no donation to temple, schools, welfare activities, right? For that, budget allocation must be there. And also, you can organize some New Year festival, blood donation, medical camp, tree planting program with the neighbors, right? So those programs, I think, not much they have highlighted, right? Other than the supporting local school uniform donation program, right? And also the another one which is not there in this company, the part of your wastage, right? Part of your wastage you can give it to the neighboring people, unemployed people. They can have their own business. They also will grow when company grows in line with the company, right? So part of your wastage, rather than selling at the higher price to the outside people, certain percentage, for example, 30% or 40%, right? You can give it to the surrounding people at some price, right? Therefore, that tremendously help them to grow their lifestyle. So that is not there in the CSR part of the company, right? And also, you have a transportation, lorry, bus, van, trishow. So those also you can give the priority for the local people, taking from the local people, right? So those also basically directly or indirectly and helps them to uplift their daily life, right? So they also will develop. So those are not mentioned in this CSR part of the company, right? So with that, I think you can decide. We have identified many number of cases in each and every section. So you know now how to identify, right? What are the how to identify based on your marketing knowledge, management knowledge, accounting finance knowledge, internal audit knowledge, right? CSR knowledge and appropriate step. The solution you can now present it. Very simple, practical solution, right? So I think everyone you have basically got the good practical insight. So Kalar, I think we can conclude the presentation, no?
Right, Mr. Rohit.
I don't know whether if student has have the questions.
Yes, students, do you have any questions to raise at this point?
So I took 2 hours nearly, no two and
Yes,
some of this
actually,
explanation
very good.
might be too technical, but I
Yes,
explain it because for the betterment of the student.
I think it's a very good analysis, I think. Right. So, anyway, I think there are no any questions from the audience. So, anyway, I believe our students they have gained a valuable experience in critically analyzing a case study, even line by line, and in identifying issues that hidden behind the words in the preceding material. So I think this will provide them with a kind of a strong foundation to build their arguments effectively in the verbal pitch assessment while recording their presentations. So I think I shared. I think there are certain questions.
These are basically the way of
Yes,
giving that information to the institute. Not
yes. So there is a separate guideline, step-by-step guideline, and all those instructions under on our website. So you can go there and refer to that one. It's there in the same folder which you have downloaded your pre-seen case study. So you can yes, all these information are there. So you can go to the website. So then go to the students tab. and then to the examination division page. So there, the link is there still, where you have downloaded this pre-seen case study. So all the documents are there, all the instructions, step-by-step guide, how you can record your video, how to prepare your that PDF document that you are going to upload into the LMS. So all the instructions are there, so you can go there and refer to that. And at the same time, I shared this Google form, so you can give your feedback to us. So and again, yes, and my sincere thank goes to Mr. Rohita for generously sharing his expertise with us. So guidance and it's it's very truly invaluable to our students during this because this capstone is a new subject under the new curriculum. So I think this would be greatly helpful for them to uh, go ahead and do their capstone assessments. And yes, so thank you very much, Mr. Rohita. Thank you very much for the support and for the guidance.
Thank you,
Okay,
Kalaran. Thank you all. Good night.
okay.